Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided and made available through this podcast does not constitute financial advice. The information is of a general nature only and does not take into account your individual objectives, a financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice. We recommend that you obtain your own independent professional advice before making any decision in relation to your particular requirements or circumstances. Positive Tax Solutions and its representatives do not warrant the accuracy, completeness, or currency of the information provided on and made available through this podcast.
Good morning and welcome to Wealth Coffee Chats. It's Tax Tuesday again. And I wanted to spend a little bit of time this morning talking about payroll variations. This is a topic that's very useful to people who are on a payroll and employed. If you're self-employed, you get to manage your own tax affairs, I guess, a little bit better. But if you're on payroll, then one of the first things that appears or disappears out of your pay slip or out of your pay each week is tax. It's taken from your pay before you receive anything, and the calculations are based pretty much solely on what your wage or salary is. Now, where this can gum things up as far as tax is concerned is if you, for instance, have negative gearing. So your taxable income is actually lower than what appears in your salary, or conversely, where you've got positively geared property and your taxable income is higher than the salary that you receive, then the tax calculations and withdrawal of tax during the year is obviously inaccurate. Payroll variations are a way of asking the ATO and your employer, or asking your employer through the ATO, to vary the rate of withholding to match your likely taxable income at the end of the year, instead of what the employer has on file and really only has on file, which is your wage or salary. These payroll variations are applicable for the financial year that they're applied for in, and the usual process would be to do it yourself through MyGov, though it's a bit of a faff around, or have your tax agent organise one for you. Again, this is something that's useful for people who are employed, not self-employed, where you get to manage your own tax affairs, and where your taxable income differs from what your salary is. Now, why would you do this? Well, the first and main reason is if you're negatively geared, you're paying too much tax out of every payslip. It gets taken by the ATO. It ends up in their bank account for the full year. You can get it back when you complete all of your tax returns. But of course, when you do get that money back, you don't get it back with any interest. Now, in the meantime, if you've got any debts, if you've got any payments you need to make, if you've got any loans, of course, banks are charging you interest on those, and the money sitting with the ATO is not available to you or for you to either reduce your debts by putting money in offset, prepay loans, or do a bunch of other things. And so leaving the money with the ATO is just not smart because you could use it for other things. So certainly when you're negatively geared, it might be a good idea to request a payroll variation, reduce the rate of withholding to match that of your taxable income, to have your net pay go up, and then to allocate those funds to an offset account to reduce loan interest on a principal place of residence. This is typically one of the things that people do. Now, because it's only applicable for the course of the year that's applied for, and because it takes up to 28 days, maybe a little longer sometimes for the ATO to approve the process, the idea would be to submit the payroll variation literally as soon as you can. For clients of Positive Tax Solutions, we may do this before we complete the tax returns, and we may gather the information required to do this before the end of the previous fiscal year, so we can get the application in as accurately as we can, as early in the financial year as possible, as soon as the withholding process opens up, so that you can benefit from this for the course of the full fiscal year. And do this again basically as often as your taxable income varies from your payroll income, either positively or negatively. Now, if you end up with positive geared property, it might be useful to do a payroll variation with your employer anyway to increase the rate of withholding so you don't have to reach in your pocket and again pull money out, manually update the ATO. They're going to come asking for additional tax every quarter anyway, and so you can essentially cover that off. How do you get it done? Well, I mentioned you can do it through MyGov. You can work through a tax advisor or an accountant. That's how people I speak to get it done. And the sort of information that we need is a little bit of the stuff that's going to end up in your tax return anyway. What's your likely taxable income going to be for the year? What are some of the deductions? What's your tax file number and employer details? Because again, the ATO needs to reach out to payroll and have them authorize a change in withholding. And so that's the sort of information that's required. Some gotchas, if there are any. Really the most applicable use for this is negatively geared investors, as mentioned, people on payroll, as mentioned. And here's one of the definite things that goes on. You can only apply for one of these and have it put in force if you're up to date as far as the ATO is concerned. If you have any tax debts, if you're behind on your tax returns, if your affairs aren't up to date as far as the ATO is concerned, then they're not going to let you vary withholding on tax. They'll want you fully caught up before you can apply for this. So another reason to be up to date with the ATO is so you can have them withhold only what you need to, rather than the excess they might do if you're running negatively. So you can't have any outstanding tax debt. You can't have an assessment that you've got more income, obviously, than is in your payslip. Otherwise, that's sort of less than useful. And all required returns and statements need to be lodged. So that's a little bit of information on payroll variations. You don't need to wait for your tax return to be done to get this done and put in. It is an estimate only because, of course, it's calculated in advance of the income actually coming in. You want it to be as accurate as possible so you don't have a requirement to either collect back or lodge a lot of extra tax at the end of the year. So a good idea of what's going on as far as income and expenses is concerned in advance would be required. But again, if you're on payroll or you are running negatively, both of those things, that's an and, you should definitely consider getting one of these things done. Okay, that's the update for Tax Tuesday. Hope everyone has a wonderful week. Cheers.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.